Now, let's get to what's going to be my favorite part of this podcast so far. It's going to be when we talk about real estate. You know, we talk about finance. We talk about real life, Julia. So when you go to mortgage loan officer school and you go through your certification, your credentials, do you think, I wonder when I'm going to use all this stuff?
Oh, yes, absolutely. I remember thinking, Ronnie, 22 years ago, what did I actually learn in mortgage broker school that's going to help me in day-to-day selling? And it didn't help me.
Nothing.
I'm just going to be very real. It was a lot of law. It was a lot of mortgage jargon that really you need to know how to be compliant. But that's why you have really good team here at Keller Williams to make sure that you stay compliant. But you also want to know a little bit about the law, but it doesn't take you to where you need to go in the real world.
Julia, realtors know exactly what you're talking about.
Yes.
Because I've never in my life calculated the square footage of an acre. I just go on the internet and I find out what it is. But in real estate school, you have to learn all these things.
Right.
And you have to learn all this commercial and rental. And when you're a broker, forget about it. So the reason why I say that, guys, we're going to enter an area that is very fun. If you're really into real estate and the art of the deal negotiations and you're a fast thinker, problem solver, that's why I like real estate. And I'm sure that's why you like mortgages, because you get to use your problem solving skills. But let's talk about some of those things that new agents don't know. I know, you know, experienced agents know, but new people have no idea, right?
Right.
So one of those things that we're talking about was not talking to the lender prior to writing the offer, prior to even not talking to them at all. Agents do that.
Yes.
So what have you seen where agents write these offers, write contracts, maybe they have a pre-approval letter, but they don't talk to the lender at all?
So what we do differently at the Julia Bell team is we call before the listing agent has to call me. So if I know that our agents are writing in an offer on a property, we're already calling the potential listing agent, letting them know that they have a new offer that was just proposed on their desk from ABC real estate office. And we're letting them know that we've already gotten all of documentation on behalf of the customer, because I would rather let us stand apart and our offer stand apart before they have to call me.
That's right.
Because if they have to call me, then I'm just one of 10 other offers possibly that are coming through the door. So if you have a lender that's going to be very proactive in making sure that we help you to shine right out of the floodgate, it's critical. I also can tell you that listing agents want to know that they know the lender.
Yeah.
I can't tell you how many times I have had agents that I have called that have said, Julia, we already know you're working on this deal. We already know it's going to go through. You know, I'm going to propose the other offers, but there's a good probability we're going to get it because you're a local lender and you're here.
Reputation, right?
Absolutely. And they don't want to work with the online companies that they can't get anybody on the phone on the weekend if they need something.
Absolutely. And listen, as an agent, as a buyer's agent, I make it a point when I meet a new client for the first time to call that lender and say, hey, I'm working with John Smith. I just showed him 3 houses. What can you tell me about him? Has he already been pre-qualified, pre-approved? What should I look out for? Because, you know, maybe the DTI is at a point where the HOA. I actually called you earlier about that client with the HOA, 55 plus community.
Yes.
And I said, Julia, is she going to be okay with that high HOA?
Yeah.
For DTI. People don't think about that, right?
Yeah,
and that could kill the deal right there.
Absolutely. Yeah.
Or taxes.
Yeah.
An area of high taxes that can kill. So I want to call the lender and be like, hey, I'm thinking about writing an offer on this house. Here's the HOA. Here's taxes. Is that going to be a problem for her DTI?
Yes. And your lender partner, you should have the kind of relationship with them that you already know if somebody needs closing cost assistance from the seller. And you already know what that looks like, because different loans have different seller contribution maximums.
That's right.
And I think it's really important that we touch on that just briefly if now's a good time.
Sure.
So on VA, the max seller contribution is 4% of the sales price. On FHA, it's 6%. But I will tell you, if a lender's charging 6% towards closing costs and prepaids, they're overcharging our customer and we need to talk.
Yeah, for sure.
Because that's too much. For investment property conventional loans, the max for investors, the seller can only pay 2%.
There we go.
So that's really important that the agents know this.
And that's closing costs, never towards down payment.
Never.
Unless it's hometown heroes, and that can be used.
That can
program.
be used for
but
down payment.
There's not almost any programs that will let you use that money to down payment. The borrower has to have down payment funds. And that brings me to one point here, and that's not asking your buyer how much liquidity they have.
Right. Yes.
That's a big mistake.
Absolutely. And we would be verifying there to make sure that they have the money. And if they don't, then we're having that conversation long before we're issuing a pre-approval letter. And we're saying, all right, who's gifting you the money?
Where are you getting this money from? Under your couch?
It can't be your credit card that you have a $25,000 limit, because that's borrowing money to borrow money, and you can't do that.
That's right. Or hey, I have $10,000 in cash.
Right. Yeah, in the mattress. No mattress money.
Where'd that cash come from?
Yeah, it has to be seasoned inside of a bank account for 60 days.
So that's a big red flag or big mistake that I see people not even asking their clients. So another agent mistake or agent issue that happens is they don't check that the property meets lending guidelines.
Correct.
Again, we mentioned it before, trying to get a condo with an FHA or VA loan that isn't on the list.
Right.
And
a lot of times the listing agents don't even know if it's approved for financing or not, which is a real no-no in our eyes, and I'm sure yours too.
Of course.
If you're taking a listing, it is critical that is this financeable? Am I going to have to ask for a cash offer only, or is our lender going to be able to get it Fannie Mae approved for us? But knowing that before you put it live on NMLS is critical.
Listen, having submitted so many offers in my career, I will tell you I've seen HOAs being sued or HOAs suing a builder.
Right.
You can't get financing.
Right. Certain litigations will eliminate financing from being an option.
Condo associations where there's a big lawsuit between the owners and the building management will stop sometimes deals.
Right.
I've seen, properties that have FHA, VA under 2 years of life on the roof.
Yes.
That
could be a challenge.
That will kill your deal sometimes. If you're looking at some other issues that I've seen when it comes to this, those are the major ones, right?
Yes.
The kitchen. Kitchen. That kitchen may not qualify for FHA, VA, right? What do you know about that?
Well, it's a funny story how this kind of works. But if there's a stove top above an oven where a range would be, then there's a requirement that there be a range and an oven underneath the stove top. That's for certain. If there's a spot and there's a hole where a dishwasher or refrigerator needs to be or should be, I have done a little background research, and if you put up a piece of plywood and make sure that it's a safe environment, then we could potentially pass FHA appraisal, get it closed, and they could put in those appliances after the fact.
There we go. So again, some property guidelines that have to be met.
Yes.
And a lot of agents don't know that, or they just don't do the research.
Right. No broken windows.
Yeah.
And anything that could make the house not safe. So if you walk up to a home and you walk up a set of steps and the wood is rotted and the soffit's about to fall down on you, that's a dangerous situation. And anything that's dangerous could potentially prevent it from FHA financing. So if you see those kind of red flags, call us, ask us if it's going to be a problem. And then maybe it's just a quick fix that we have someone go out there and remediate the problem before the appraiser goes out. Because once the appraiser goes out,
that's right.
Ronnie, you and I both know, then it's going to require a final inspection, which is more money to the client.
On that same note, here's one: homeowners insurance, another agent issue, agent mistake. They don't accurately get that insurance binded by the time of closing. And listen, will a homeowner's insurance policy insure a termite infestation? Probably not.
Probably not.
So if the property has a termite infestation or major damage or major structural, electrical, double tapped, this and that and crazy hodgepodge stuff, right? And you can't get home insurance, can you get a loan?
No homeowners insurance, no loan, because our mortgagee clause has to be right on that deck page indicating that there's insurance. And if an agent decides that we're going to move up a close date, which I'm a big fan of doing as long as everything's ready to do it, then at that point, we've got to make sure that deck page matches the close date.
There
so
we go.
if we're moving up a closing, we've got to move up the deck page of the insurance policy.
100%. So that's another agent miss there. Another agent miss I've seen is going to be when agents don't know what loan approval means. Apparently, they have amnesia, didn't read paragraph 8B of the contract. Loan approval is a real thing. What is loan approval, Julia?
So loan approval, it means that it's actually loan commitment.
Loan commitment.
It means that the loan has already gone to an underwriter and the lender is committed to doing the financing. So your FAR contract changed about a year ago.
That's right.
And when it changed, it also included the appraisal in that loan commitment
100%.
date.
Yeah.
So I just, I'm not a compliance guru for contracts, but be very cautious of that date.
That's right.
Now,
because just to clarify on that,
Yeah.
that means that you have to have a satisfactory appraisal or a lender approved indication of value for that property prior to the end of your paragraph 8B financing protection date. So that means that you have to have a good appraisal.
Yes.
So let's say the appraisal comes in below value. Well, either party may say, nope. The seller can say, I'm not going down. The buyer can say, I'm not going to buy the house.
Right.
Or they can negotiate somewhere in the middle. And if everyone's happy and the borrower has the cash, we can figure out a solution.
Absolutely.
But that has to happen prior to the commitment date.
Yes, it does. And I will tell you, with us, we submit the loan immediately once we get all of the documents and a contract from our agents, and we receive loan commitment within 6 hours of submitting it.
Wow, that's fast.
It's huge. So your
That's
FAR
huge.
contracts, most times, doesn't it say that if you leave this blank, it'll be 30 days?
That's right.
Okay. So that would be crazy because most of the time in the state of Florida, we're closing in a 30-day window.
That's right.
So we like to do things quickly. And a
that
6-hour
just makes
underwrite's
you
huge.
Way more competitive when I
Very.
can say, Julia, my sales price is a little bit lower, but can you close in 20 days? Yeah.
Absolutely.
Let's find out, right?
Yeah.
If this borrower has W-2, no issues, good credit, yeah. Now, if the borrower is a nightmare where they have child support and bad credit and they have a 1099 and we can't source the funds, maybe I wouldn't push 25-day close, right? That's why we have to communicate together.
Absolutely. Yes.
Yeah.
Actually, we have one from your office, the Heritage office, that we just submitted this morning. We have loan commitment this afternoon, and we're closing it December 31st. And
love it.
literally just submitted it today.
And we're closing right in time for the new year, so very cool.
Yeah. So they get the homestead exemption also.
So those are just some things that you might want to consider as a new agent. I know we mentioned a lot of topics there, but play the video, research some of these items because I've seen it doing real estate since 2016, hundreds of deals, and Julie has seen it also in her mortgage practice. Some of the top agent misses.
Oh, yes.